Hello, welcome to European Open Briefing for Thursday, February the 21st. I'm Rafi Bayajan, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. So trade optimism continues to dominate the market theme. There's reports that the US and China are drawing up the outlines of a deal. So that is maintaining that risk-on sentiment that we've had for much of this week, though Asian equities did pare back some of their earlier gains, and we do have a mixed start in European shares as well. The dollar index is slightly lower this morning. It did rise yesterday after the Fed's meeting minutes showed that policymakers could still raise interest rates later this year if inflation starts to strengthen, but overall the minutes were dovish, and dollar yen is slightly lower at around 110.68 at the moment. European currencies are faring a bit better. Sterling is still being supported on optimism that we could soon get a Brexit breakthrough. Euro being lifted this morning from better than expected PMIs out of the Eurozone. The worst performer though this morning is the Australian dollar. Despite the fact that we saw better than expected job numbers out of Australia, we then later had some negative headlines which we will look at very shortly. But first, looking at the Fed's minutes from yesterday, which initially did help the dollar climb higher. Overall, the minutes were very dovish, and they confirmed that the balance sheet unwinding will likely end later this year. But policymakers still express their views, saying that interest rates might be needed if inflation does pick up later in the year. So they didn't totally rule out a rate hike for 2019. And of course, we've got that trade optimism, which there's reports that the negotiations from both sides are preparing memorandums of understanding on 6 different trade-related issues. So at the very least, that's a sign that there's significant progress is being made, and the talks are set to continue for some time yet. Let's now have a look at what happened to the Australian dollar. We can see that spike above the 0.72 level after the Australian economy added much more jobs than had been anticipated for January, but then we saw the Aussie slipping back sharply. Initially, we did see a major Australian bank, Westpac, updating its forecast for interest rates for 2019, saying that it still expects 2 interest rate cuts this year. But a bigger concern is reports that China may have banned Australian coal imports, particularly a major port, the Dalian port, is not accepting Australian coal imports. There have been rising tensions between Australia and China, so that could be one potential reason for that move. The Aussie is actually briefly slipped below the 0.71 level on the back of that. And quick look at the euro. We finally got some good news out of the Eurozone. The flash PMIs for February mostly beat expectations, with the exception for the manufacturing PMI, which in fact dropped below 50 to a 6-year low, though the euro is still benefiting slightly from that positive data. Shortly, we're going to have the ECB meeting minutes for the January meeting due at 12:30 GMT. If the minutes are dovish, that could weigh on the euro. The euro could pretty much erase its gains so far today. And finally, looking at sterling, the pound did rise to 2.5-week high 1.3108 yesterday, on signs that the EU may provide the UK with legal assurances on the Irish backstop issue, although this is conditional on UK Parliament accepting any changes before the EU signs it off, because given what happened the last time. But then we saw the pound coming under pressure yesterday after 8 Conservative MPs quit the party to join those 8 Labour MPs who also quit their party, and together they formed an independent group in Parliament, and that could make it more difficult for Theresa May to pass through a deal. We also had reports that Fitch is considering downgrading the UK's credit rating, so that is also a little bit weighing on sterling this morning. So that's it from me. Thank you very much for watching, and have a great day.